Welcome everyone to our current edition of Virtual Viewpoints by Texas Women's Foundation. Let me get our slides going, and we're so happy you are here today to join us to talk about investing in women and mobilizing capital for female entrepreneurs. We want to share with you what we've seen in the landscape of investing in women and really provide some insight into how we can provide more capital to women entrepreneurs. I will be joined shortly by Sarah Brand, who is a partner in a venture capital fund that is focused solely on funding women entrepreneurs. And I also will be joined by Suchi Acharya, who is an entrepreneur here in North Texas, who's faced her own challenges in getting funding for her enterprise. At the end of the panel discussion, we will have times for question and answers, and feel free to go ahead and start putting those questions in the question box. So let's get started. First, let me provide a disclaimer because we are talking about investment information, and we want to make sure that you understand that this is not intended to be solicitation or a recommendation with respect to any purchase or sale of securities, and do not take this as investment advice. So our agenda today is going to be first a few slides from me that provide an introduction to venture capital and really where the funds have been going over the last several years. Then we will bring out our panel participants and have discussion from the various aspects of venture capital. So let's start with a definition of venture capital. Venture capital is really a form of private equity investing. It's a type of financing that investors provide really to startup companies, not necessarily super new startup companies, but startup companies nonetheless, and they're usually small businesses that have a high potential for growth. Venture capital generally comes out of well-off investors, investment banks, and other financial institutions. But you'll hear today how individuals can get involved in that as well. And we will be talking a little bit about what it takes to be an accredited investor, which is a requirement of the SEC in order to invest in venture capital. So where does venture capital fit on the investment spectrum? If any of you are familiar with your own retirement investments, you know it's important to have a well-diversified portfolio that ensures that regardless of the market, there's some protection. And that means you have to have investments that are low return and low risk, and also high return and high risk. So you see at the top of this slide, private equity at the top, which, as I said, includes venture capital, and it is really one of the higher risk areas, but also has a huge potential for revenue coming back to the holder of that investment. Angel investing is another area that we won't talk about in detail, but it is even riskier, but that is an area where many individuals have an opportunity to provide an early funding to startup businesses. Texas Women's Foundation has a diversified portfolio that we have focused on with a gender lens, and really what we're talking about today is a part of gender lens investing. So let me give you just a little context. If you're investing with a gender lens, you are intentionally incorporating gender-based factors as you decide who to invest in. And you can do that from many different angles. Here's a list of 6 of them, and we're going to talk specifically about 2, but some of the other areas are things like products and services. And maybe you're thinking about your real estate investment and investing in affordable, sustainable housing for women, or women in the supply chain where you've got an equity investment, maybe in a large company, and you're choosing that investment because they have ensured that there's equity along their supply chain and have included women. For this conversation, we're going to talk about women in finance, which are investing your funds in female fund managers, organizations with female representation on investment committees, asset managers, and individuals like Sarah who are working from a female perspective to move money in an equitable manner. And then we'll also talk about women's access to capital, which really goes in partnership with that, and that is investing in female entrepreneurs and women-owned businesses. So how much of the money that's out there in venture capital today is going to female entrepreneurs? This is a study that the Wharton School at the University of Pennsylvania has been doing for 3 years now, starting in 2017. And this is the dollars of venture capital that are going to female entrepreneurs. And you can see in 2017, it was about 1.1 billion going to female entrepreneurs, with about 58 firms participating. And over the subsequent 2 years, you see the dollars approximately double each year, which is fabulous. And the number of firms are growing by about 50%. So if you look at that picture, it's pretty exciting. But if you look at the whole pie, the larger pie, those circles would be very, very small. You would barely be able to see them, because in reality, only 3% of the total venture capital in the US is going to female entrepreneurs. So let's take a little bit deeper dive. The next few slides are from the website pitchbook.com that tracks female enterprises as well as co-founded female and male enterprises. This slide is the deal count that is going to, and the deal count, we mean how many deals are being invested in by venture capital funds, going to female founders or female and male founders. And you can see from 2008, there's a slight increase maybe in the female founders, and then a more gradual increase for the co-founded enterprises. The growth definitely is slower in the female founded. And you can see that toward the last couple of years, it's almost leveled out in both cases. This next slide shows the combined deal count in that green line, and then the dollars associated with that. So the green line in this chart makes it clear that the number of deals actually being funded has dropped in the last couple of years. And it's exciting to see that the actual dollars going to these deals has almost doubled. It's grown by about 75% just from 2020 to 2021. But if we could dig into that last bar, that's exciting, and just looked at the female founded companies, you would see that the funds going to those organizations has really dropped from 15% to 11%. This slide is more from the percent of capital, the dollars, instead of the number of deals. And it's a little clearer on this one that the female founders number is dropping, and you can see it's very erratic even when you have a co-founder that's male in the percent of funding that is going to those organizations. So in 2009, less than 3% of venture capital dollars were going to women-led startups. Today, it's actually closer to 2%, which is where we were over a decade ago. So we have made very little progress, and obviously COVID has had some impact as the numbers declined. So how do we close this gap? Well, that is really what we are here to discuss, and having experts and those who have experienced this at the bottom level is where we want to go. So we're going to bring out our guest, Sarah and Suchi, and get them introduced and start a conversation. Welcome, Sarah and Suchi. It is so glad to have you with us today. Let's start with just doing a quick introduction. And if you don't mind, Sarah, can you start?
Sure. Thank you so much for having me. And I'm Sarah Brand. Myself and Carrie Rupp, we're both based in Austin. We run True Wealth Ventures. It's a venture capital fund exclusively investing in early stage women-led companies who are improving environmental or human health. We have two funds. We're fully invested out of a $20 million fund one, meaning we've selected all 12 companies in which we're investing in. In fact, our last one we just made in August is based in Dallas, which I think most of the people on this call are calling in from. Rosie's the name of the company. It's Lindsay Harper is an OBGYN who left her medical practice to start this company focused on women's sexual health. We're working on a fund two right now. We've already made our first investment out of a $30 million fund two, where we'll invest in about 15 companies. And two quick interesting facts about True Wealth Ventures. When we closed our fund one, it was in January 2018. It was just under $20 million, and that was the largest venture capital fund ever raised to have an explicit gender lens focus. So that's an awesome accolade for, Texas women being at the vanguard of this movement, but it also is just a real testament to how nascent this opportunity is, and because that's really a nano fund in the VC realm. The other unprecedented thing about Fund One is that 80% of our investors were women, 90% in Texas. And that is something that has been unprecedented with the numbers of, money in venture capital going to these women entrepreneurs. Is no huge surprise maybe that it hasn't been a lot of women investing in this space. But it's something that's really important because we see that women are estimated to control 2/3 of all US investable assets by 2030, and haven't been investing in this asset class. So we think it's really important for our entire innovation economy and other reasons that we'll get into that women start looking at this asset class.
Thank you, Sarah. So women investing in women, that's what we're talking about today. Okay, Suchi, let's have you introduce yourself a little.
Yeah, sure. I'm Suchi Acharya. Thanks for again inviting me to participate in this panel. I'm very excited to share a little bit about my background and what I do at IUV's research. I am originally born and raised in India, and I have moved to Dallas, Texas in 1998 to do my postdoctoral research, and I was only that was only at age of 28. I moved with my husband, and I continued finishing my postdoctoral training in organic and medicinal chemistry, and learned a lot about drug discovery and development. Those prepared me to start my first pharmaceutical research career in Alcon Pharmaceutical here in local in Fort Worth, Texas. And just for everybody who doesn't know Alcon, that does, it's a leading ophthalmology drug discovery pharmaceutical company. And I have been there for 12 years. I've spent in pharma industry, large pharma, more than 12 years, both at Alcon as well as Novartis. I also worked in some smaller startup companies to learn about how the startup business learns. So that was kind of like a training consulting kind of thing before I started my own company, which is IUV's Research. And IUV's Research is located in Fort Worth, Texas. It's a startup biopharmaceutical company working on a breakthrough technology of modulating our body's immune system, which can help in mitigating several disease indications associated with lung, kidney, gut, and sepsis, bacterial infection. So it's a something cool technology we are developing, so very proud of that. And you can always find more information from our website. Dawn can share. Yeah, so that's in brief about me and IUV's. Yeah.
Thank you, Suchi. It's very impressive work you all are doing. So Texas Women's Foundation has really been on a journey since 2011. We want to drive 100% of all the assets under our control to making the world a better place for women and girls. In 2019, we succeeded in moving 100% of our institutional investments to a gendered portfolio. It was about, thank you, Sarah, it was about 26 million in assets. Shortly thereafter, we had one of our donors move a very large donor advice fund of almost 11 million to the foundation because of our gender lens investing, so that those funds are sitting there waiting to be granted, could also be doing good for women and girls. So that's what we're all about. So our investment portfolio includes a whole line of investment vehicles. So I'm curious, with all the options out there, Sarah, why did you choose to focus on venture capital specifically?
Right. Yes, there are certainly lots of options for startups to get funding, from non-equity options like grants and bootstrapping their businesses, bank loans, and then there's equity options. Public equity isn't an option until you go public and, IPO. And so venture capital, like you mentioned in the introduction, is a subset of private equity. And it is the #1 source for the high growth economy. So venture investment dollars only make up 0.2% of the GDP. But in terms of the revenue coming from venture capital backed businesses, it's 21% of the US GDP right now. So it really punches way above its weight. And so these critical early stage venture capital dollars are the ones that really provide the rocket fuel for these early ideas to grow quickly and get out into the market. And so they really are very influential in terms of what businesses and what next ideas we're going to be able to, that will be in the world. And so the reason why we focused on it is because of that critical importance and the fact that it's completely broken in terms of gender diversity. Really, in a nutshell, it's mainly white men in Silicon Valley investing in white men in Silicon Valley, just to really summarize that quickly. But the amount of venture capital dollars, when you look at that percentage, even though the numbers have gone up in terms of deal count and dollars, when you look at it as the overall pie, it's still hovering around 2%, right? For this last decade, it just is not rational behavior in terms of the financial outperformance that we've seen for women-led companies that get venture capital dollars. It's not rational, it's broken. And the important thing is not just that we're missing out on those financial returns as an economy, but we're missing out on critical innovation that gender diverse perspective brings, especially in areas of environmental or human health, because women have such an advantaged perspective since they're on the front lines of making 80% of all healthcare decisions, right? For themselves, for their families, for their aging parents often. And they're also making 85% of all consumer purchase decisions. So they see what products are available or not available, what solutions are missing from the economy. And one of my favorite perspectives is, or just examples, is the rolling suitcase. I don't know if you've heard of this, because this Nobel-winning, economist uses this example in a couple books of like how things can be blindingly obvious, but still innovation can be so slow. So the rolling suitcase wasn't patented until 1970 by an American man. This is 5,000 years after the invention of the wheel. And actually, after we put 2 men on the moon in an electric vehicle with wheels, like driving on the moon service. But it was, even after it was officially invented in 1970, and it was invented way before that, because there's photos of women who had rigged up rolling suitcases in the 1800s because porters had, gone on strike. But it still took decades for it to get adopted, because it was unmanly for men to use rolling suitcases and women weren't traveling alone, or that was the thought in these markets. So it's just such a good example of how slow innovation can be when we don't have gender diversity around the innovation table.
I love that example. I had not heard it before, so that thankfully there are women out there getting wheels on our suitcases, because I appreciate that every time I travel. So Texas Women's Foundation has done several different investments that are focused on women access to capital, whether it's private equity or microloan funds, which we have done 2 of, which are much smaller funding mechanisms, and angel funding. So Suchi, with all of the options out there for an entrepreneur to get access to capital, how did you fund your business initially, and what other types of funding have you needed or used?
Absolutely, and that's a good question, and that's always the question when you start your own company. So what are the options? Of course, there are multiple options, but especially in life science and biopharmaceutical programs, it's very difficult to raise funds for. So that's one of the challenge. Definitely, we did take multiple approaches in the initial stage when the company where we needed proof of concept studies and filed our first patent, etc. Mostly me and my co-founder, who is actually my husband, we both invested our saving money in this company for this great cause, and we see a great technology coming up. So we definitely invested initially to generate some proof of concept, result in, let's say, in the biopharmaceutical industries, in animal studies and all, which actually fueled to apply for a small business innovation research grant from National Institute of Health. And so we did few trial revision and things like that. It goes, that's the whole process, the packages. But we were successful in receiving a couple of grants from NIH, the small business grant, and that basically jump-started our company's progression, like renting our first lab space in the incubator, hiring our first biologist, and things like that, and then generating more data, of course. The other thing was very interesting in terms of getting non-dilutive funding is receiving a business grant from NIH, which is NIH at I-Corp, and it helped scientists like me to go through a business program and understand the business side of the science story. So it was pretty impressive. It's kind of like a 6-week boot camp, but I went through that. I enjoyed it. And also later on, once we generated some solid data to convince the investor and stand in front of them and pitch, that's where we were able to raise fund from our local DFW angel investor group. So that's the first funding we got. And then till then, we keep raising money. We are now in near clinical stage, one step away to go to the clinic with one of our lead compound. Right now we are raising the equity round. So that's where we are right now.
So Suchi, what challenges would you say you've encountered? I mean, any of us that have worked in this space know getting money for anything, whether you are a nonprofit trying to fundraise or something else, is hard. And fortunately, the National Institute for Health does have the ability to provide grants, which is great for the health community. But were there specific challenges that you encountered that you think are common to women who are fundraising?
Absolutely. That's a good discussion what we are having today, and I would like to definitely share my challenges and experience with you all. Along with the challenge that come with starting a pharma company, there is another unique set of challenge for a immigrant women like me. I know there are statistics out there that show it is more difficult for women to raise funding for their startup company in the US, but it was a quite interesting experience to also learn how adding a language barrier or cultural difference can also impact the fundraising efforts. I know that people have doubted me and my ability to grow the company and raise funding. In the early days of 2018, when I started pitching first to the investor groups, I was told, well, I will not able to raise more than few $100, possibly, even if the science is sound. And I feel this kind of pessimistic statement could have been directed towards my gender and ability to balance my work and life as a woman and a mother while leading the company, right? So that's what I felt. The other challenge I faced is my accent as a non-native English speaker. Though I'm fluent in English and all my education from elementary through higher degree were taught in English, I realize my accent can still be difficult to understand at times for people who are not used to it. Or maybe there's some prejudices associated with it, or the person may be not listening carefully. So that could be some of the issue. But however, I have never let these challenges stop me. And, I have worked hard to get through the challenges every day, little by little. I've also found great support system here in Fort Worth through my team at IUVS, through my several mentors in the business incubator, which is Tech Fort Worth, my academic collaborator and partner, UNT Health Science Center, where our company is actually located. So, they all helped to reach my goal well over some people's expectations. So I would say there are challenges, but there is also way to overcome it if we put our mind into not let slide all those small things.
Thank you, Suchi. I think it's well documented that there's a lot of bias in the investment community, and it's important that we have organizations like Sarah's, and Texas has several women-focused funding mechanisms, True Wealth Ventures from Sarah, Texas Women's Ventures, the Artemis Fund, and it's women who are sensitive to a lot of these biases that can really move capital. But there's still so much unmet capital needs out there. So how does the investment community really change so that women are getting their fair share of the pie? Sarah, can you address that? And then maybe how women investors can play a key part in that?
Yes. The numbers are really frustrating in terms of, how few dollars are going to women entrepreneurs and all those biases that are in the system, especially given the studies after study after study that show the financial outperformance of women entrepreneurs like Suchi, when they do get venture capital dollars. And so we see this as a two-part solution. First part being getting more dollars to women venture capital fund managers, like True Wealth Ventures, where it's 2 women GPs, general partners, managing the fund. And we have an explicit gender mandate, so we only invest in women entrepreneurs. But even if there's not an explicit, gender mandate, any venture capital firm with at least 1 woman partner has shown that it's 2 times more likely to invest in a company with a woman founder and 3 times more likely to invest in a company with a woman CEO. Now, you have to be a little careful about picking the VC funds because there's a study at the end of last year showing that there's only 2.4% of VC partners at funds that actually lead investment decisions on behalf of the firm. So most of the partner level roles that women do have at VC firms today are actually like CFO or COO or CMO type of roles, but they're not actually leading the investment decisions. So have to be a little careful, but I think generally speaking, just getting money to gender diverse teams. And the second part of the solution, which I think is the bigger part, is having women investing in venture capital, period, as limited partners. So those are the investors in VC funds. Like I mentioned, 2/3 of US investable assets are going to be controlled by women by the end of this decade. So it's important just for an entire innovation economy that we get women investing in this asset class. But we've seen the data from women investing as angels, like directly into companies, that women angels are 2 times more likely to invest in a gender diverse team. They care more about the diversity of the management teams that they back. And they're 10 times more likely to invest in companies that have positive social impacts. And so, this is, we think, the most effective and efficient way to get more money to women entrepreneurs is getting women investors engaged in this.
Thank you, Sarah. So, Suchi, have you seen any shift at all in the years that you have been trying to fundraise, and the landscape getting any easier or making shifts one way or the other?
That's a very good question, Don. And I think Sarah already touched on that. What is the gap? what need to be done. And I definitely believe that there is a disconnection between the rapid growth of business owned by women entrepreneurs and the portion of investment funding getting allocated to these businesses. It's always this dogma and old school thinking that women can't lead like men. Still, that is very much exist, what I see in my opinion. And I'm also equally disappointed to see that the change is not taking place at the pace we expect, right? So I definitely believe that as an women entrepreneur, I see and understand the struggle of raising capital. So for others, I can feel that. And I have a vision of how I want to play a role in investing in other companies started or run by female entrepreneurs. So we all should think about that as a women also, to invest in the fund and then also take decision on a gender lens focused investment. I also think another point is there is not enough transparency or accountability within the pool of capital in the world, or oversight on the people managing them, which Sarah touched on a little bit. It would be ideal to see more women on the decision-making position and impacting not only in the venture capital partner as an employee or something, but actually decision making and make this, their decision counts, that yes, we need to invest fund in this particular women entrepreneur or things like that. More funding for female entrepreneur might create opportunity for a disruptive product, which may not be a thought process by the male, like, something, for example, in the IUVIS, we are going after this unmet need, which is bronchopulmonary dysplasia. It's a disease of the preterm infant, affecting a lot of new mothers and women. And we feel like this could be a disruptive change. So things like that could arise from funding to female entrepreneurs also. So it's a two-way thing, having a balance in the venture capital to have a decision-making ability, and also looking at what kind of product or technology is coming out of. So that's the kind of thing I think is more important. It should change. Yeah.
I totally agree, Suchi. And some of what you talked about made me think about how important it is to encourage our young women to be seeking roles in finance that would move them into leadership, so that they do have more decision-making power over where capital goes. Finance is not often the chosen field for women. So encourage your young girls to be seeking this, and help them understand the power they have when they can move money. For Texas Women.
Can I mention something there too?
Sure.
Because I feel like lots of women feel like they need to wait until they have a lot of wealth in order to become investors or invest in, venture capital fund or as an angel. And I think it's great, especially for young women, for them to be conscious of the fact that they're already investors. They're making micro decisions every day, as 85% of all consumer purchase decisions and 80% of all healthcare decisions. These are massive markets that they're already, through those, what they buy or don't buy, deciding what products, what management teams, what companies are going to live or die in the market. So we're already moving the markets, and being more conscious of that, I think will just accelerate we're all in finance,
Yeah, I love that point.
Yeah.
We're all in finance. Well, Texas Women's Foundation is fortunate to have two, we have an investment advisory organization, but it's led by three very strong women. And with their help, we've really been able to move the needle in getting all of our assets moved over to gendered focus, whether it's private equity, venture capital, or a housing initiative, or bond fund. And we're fortunate to have that. But as an individual, what approach should someone take who wants to invest more in women? And they want to explore that option? What would they do? Sarah?
Yeah. Yes, great question. And this is something that has been this cloaked kind of mysterious asset class. And I think, what we found out at the end of when we closed Fund 1, we had 80% of our investors I mentioned were women, and I meant that they were either invested individually as individuals, or they really led the investment decision on behalf of a couple or family office or foundation. And the vast majority of those women had never even been asked to invest in a venture capital fund before. It just hadn't even been an option. And then Carrie and I realized we both have backgrounds in venture capital, and we had never even been asked to invest in a VC fund before. So it's no surprise, I guess, that with 2% of venture capital investment decision makers being women, 2% of VC dollars going to women, that women aren't being invited in part of this ecosystem. But it's important to change that. And one of the reasons why it's been so cloaked is that the SEC actually doesn't allow a VC fund manager like myself to market a fund publicly. You need to be an accredited investor in order to invest in a venture capital fund, also, as defined by the SEC. And so that's why you're not going to get like an email saying, hey, would you like to invest in this fund? So you need to actually seek it out, ask your wealth manager about it, come to events like this, ask friends, colleagues, and you seek it out, because it won't be presented to you. And culturally, women just haven't been sharing deals with each other. We know when we go even meet with our PhD colleagues, or MBA colleagues, or people who would be accredited investors, most likely, we don't talk about, hey, I got a really good deal for you, and the guys do. And so it's something that we do have to kind of seek out, I guess. And so, that's one thing is just seeking it out, and then and understanding what an accredited investor is. That's an easy definition. It's very searchable on the internet. Basically, it's $200,000. You have to have a gross income of $200,000 the last 2 years, or $300,000 with a spouse or partner, or have a net worth of $1 million that excludes your personal or your primary residence, excuse me. So you do have to fit that bar. Some VC funds won't take accredited investors. You actually have to be the next bar, which is a qualified purchaser, which means $5 million in investable assets. So you just need to ask, what does the VC fund allow as accredited investment? Okay. And then what's the minimum investment commitment? That's another factor. A lot of VC funds might be $250,000, because if they're raising, there's regulations, you can only have 100 accredited investors. And so if you're trying to raise $25 million, that's $250,000 for each investor. If everybody invests the same amount. So understanding what the minimum investment commitment is. And the other big thing is, what's the capital call structure? So every VC fund does not need all the capital up front. They invest, like our Fund 2, which is going to invest in 15-ish companies over about like a 5-year period. We'll select those and make those first investments in 15 companies over 4 to 5 years. And then we'll follow on in 18, 24 months when they need their next round of capital. So for like a $100,000 commitment, it's actually going to look like less than $5,000 a quarter on average, because our capital calls are actually quarterly, over like 5 to 7 years. So it's a much different, cash flow than throwing in $100,000 right at the beginning, for instance. And so understanding the capital call structure, because that also varies by fund. And then also knowing that it's, like as you mentioned, high risk is commensurate, or high reward is commensurate with high risk. And so although VC funds have historically had very high returns, as an asset class, that comes with the commensurate risk, and it's also illiquid. VC funds are almost always a 10-year fund. And so, you pay your capital in over the first, 5 to 7 years, and then you get your capital back out when those companies exit, when they go IPO or when they get acquired, or typically when they get acquired. And so you can't just sell your share like you can with a mutual fund and, go put a down payment on a home or something. So it's locked up. And one thing in that just to add one more thing, you can also ask, do they take IRA funds? Because it is illiquid asset class. It's really nice if you can invest through your like IRA or 401k funds. That's something we're able to offer, for instance, for Fund 2 that we weren't able to offer for Fund 1. There's been some progress in that space. So those are my like short list of top things to know about and ask about.
I think those are great points. And we may have some listeners today that feel like they're not an accredited investor and might think that I don't need to think about this. But I think all of us would encourage them to realize their wealth is growing along with their career path and their situation. And while they may not be there today, it's important to start having the thoughts and looking into what options are, and even thinking, like you said, about your retirement fund options in there. And I would encourage you, even if it's not venture capital, that you look at your retirement fund and see if there are gendered investments within it. And if not, start asking for, and even if it's not gendered, something you care about, but we care about women. So we want you to invest in women, and they are out there. So put a little different spin on how you're looking at investments. Suchi, there's a lot of women on this call, probably some men too. If you had to share with the public what you think is most important or where they can be most supportive, what would that be?
Absolutely. Yeah, I would like to definitely put few words. In my perspective, women are extremely productive, multitasking, sincere, hardworking, and equally smart in their fields. I'm sure we all know they have proven their contribution and accomplishment, leadership in almost all fields, including science, medicine, finance, politics, business, as well as in space. So, I would encourage all the women who are interested in investing to think seriously about investing to make this difference. And especially in other women-led business, something a fund like Sarah is managing with a goal and, to support this thing. I myself started company as a founding investor and would like to continue investing given the right time and opportunity. So that's definitely a goal. And I would also like to say that in my company, I have several women investor, even they're angel investor right now. So there are, and my CFO is a woman. My main clinical business advisor is a woman. I have a few employees which are women. So we all are supporting each other and seeing it through the whole process. So I'm very excited to share this. But also I know there are challenges. There are times when you feel down. Maybe things are not, you don't know stuff. So if you want to know like how to invest, then there are a lot of resources available, like just Sarah mentioned. But if you are in the other side of the spectrum, like me, seeking funding and getting negative feedback or pessimistic viewpoint, just hang in there. You did a lot of hard work. You came along through a lot with your only foot. So I would say just keep trying, never lose your focus, and like me, follow your heart. So that's my few words of encouragement for you all.
Thank you, Suchi. If there's one thing I know about women is we do pretty well at perseverance. So push on through. We want to open it up now for questions. If anybody has questions for our panelists, we'd love to answer them. At the moment, I don't see anything in the chat. So while you are thinking about questions and maybe putting them in, Sarah, why don't you tell us a story about a wonderful success that you've had through your fund in investing in a woman?
Well, actually, talking about women are known for perseverance. I think that's very exemplified in our Fund 1 portfolio. I mentioned we invested in 12 companies. We started investing right after our first close in Q3 2016. And then after we closed the fund in January 2018, that's when we really started to invest. But we made 2 investments before then. And all 12 companies are alive, well in revenue, and to have like what's called a 0 loss ratio for a really early stage portfolio is quite exemplary. And I think it really shows the perseverance that these women entrepreneurs have. You know, women have raised, if you look startup by startup, early stage startups by women have raised 45% less capital than their counterparts, but they see a 2.5x greater return. So they're used to getting by with less capital already, you know, for better or worse. So it's just really amazing to see a global pandemic happened and all these companies saw their way through. They, you know, some had to pivot, some opened up new opportunities that they wouldn't have even been able to tap into otherwise. And it's also, I think, a testament to all of our companies are focused on environmental or human health, you know, critical challenges that have even gotten more critical over the years with the pandemic, with concerns about climate change, with massive weather events. Like these problems aren't going away, and women tend to start companies that are issues that they see themselves, the challenges they have, somebody in their family or, you know, friend group has. So they already have that advantage of like a customer market fit, or, you know, they know there's a real problem they're trying to solve. They obviously have a lot of passion behind solving that problem. And I think that's what also leads to their, you know, greater success rates.
And so we're efficient and we're good problem solvers too, right?
Yes, too.
Absolutely.
We have it all. So I am still not seeing any Q&A coming in. Do either of you have any final comments that you want to make? I do want to let the attendees know that we will be sending out contact information, so you will be able to reach out to Sarah, Suchi, or myself with additional questions afterwards. And I'm sure all of us would be glad to talk to you one-on-one. Sarah or Suchi, anything to wrap us up?
Well, one thing that I thought about when Suchi was talking actually is about, you know, trying to get more women investing, is that culturally, you know, I mentioned that women don't share deals with each other, right? It just isn't a normal thing. But one study I saw that I think is important for women to be aware of is that there was a sampling of women in all different countries across the world. US women tied in terms of the highest financial literacy globally with China. Yet US women rank themselves lowest in terms of their perceived financial literacy. So there's something culturally like an imposter syndrome about women in the United States feeling like they're not good investors or they don't know enough. And I think some of that has been just the, again, very male dominated like lingo in the financial industry. But women actually, there's great studies show they are better investors. They are not actually risk averse. They're just more calculated risk takers, and they're less prone to overconfidence. So they trade less frequently. You know, they do their homework, but then they stick to it, they commit, and that makes women money managers, women hedge fund managers, better investors, like across the board. Of course, there's fewer of those, you know, there's still like those numbers are also bad in terms of how many, you know, women fund managers there are, but they financially outperform. So I think, again, like accelerating women being conscious of the fact they're already investors and just having the confidence to go learn, try it out, you know, just start.
Absolutely. I will just resonate with Sarah. That is definitely something, a cultural difference. It's like, okay, a lot of family households, who is managing the accounting and funding, who is more educated regarding investment and things like that also matters. I think women should understand their own financial and would able to take the decision whether spending or receiving, both sides. So that's something need to be changed. If somebody is kind of like, well, I want to invest, but I don't know exactly, shouldn't I, you know, in that confusion state, it's time to think about it. And you know, it's your own decision. What do you want to make a change? You just want to make an impact on the product or whole world, or is it just a return on investment? There are two different things, but there is a good goal behind it. So
yeah, I don't think we normally give ourselves credit for the power we actually hold. So appreciate that, Suchi. Well, thank you so much, Sarah and Suchi, for joining us today. I think it's been a great conversation from my perspective, and I see notes that are appreciative from the attendees as well. So thank you for all you're doing. And I imagine you'll get some more feedback from some of the attendees.
Thank you so much for having us.
And thank you
You're
for
welcome.
hosting this important topic. Love what the Texas Women's Foundation is doing.
Thank you.
Thank you.
So we, on behalf of Texas Women's Foundation, we are super excited that you have all joined us today. If you would like to support the work at Texas Women's Foundation, go to our website at txwf.org. There is also a link on there that is tied to our investment initiatives, and you can find more information there or contact me. Here is the contact information for Sarah and Suchi, and we will also send this out in a follow-up email shortly. Have a wonderful day, and thank you all again for attending.
Thank you.
Thank you.
Bye.